fair value was 30,000 in the last cycle. We got to 68, 69. This time, let's say we only get 2 times because there's not as much leverage this time because they cracked down on Binance and others. So let's say we get 2 times, that would be 150. I think that's baked in the cake. I believe more money will be converted from fiat to Bitcoin than the previous 15 years of Bitcoin's existence. My granddaughter, who's 1, will never have one of these. She will never have a leather wallet. She will never use paper money, ever, right? She will only use digital money. They all believed, as I do, that this is a monster development, like way bigger than people think. And the issue is we just shifted the aggregate demand curve, right? So when you have supply curve, demand curve, and you shift the aggregate demand curve, the price goes up. So fundamentally, the price is going to go up. And they're like, no, look, right after they went down. I'm like, okay. So what you saw was in the short run, there was liquidations from GBTC. They were kind of offsetting the early flows. You had a bunch of the big dogs like Vanguard and UBS and Bank of America that said, no, you clients can't buy this. Really? You're going to tell me I can't spend my money on something that I want to buy? Buy Vanguard. Like literally people should, and they did leave. Now, the flip side of that is someone has to be that, staid, stodgy institution for the old folks to hold their stuff and not go after these Ponzi schemes, whatever. So not all of the capital that was captive is going to rush into ETFs all at once. So that was first. Second, some other shenanigans, very little discussed thing, Austin, was the same day, January 11th, there was a new set of futures released on the Chicago Mercantile Exchange. Nobody was talking about it. And if you go back at the previous 2, December 17th, 2017 and November 6, 2021, those were tops, right? Where the future allowed the big organizations to get short and push the price down. Well, that certainly happened in that first week. So you had GBTC liquidations, you had the FTX liquidation, you had the shorts coming in. And yeah, we went from 48 down to 38 and just retraced that whole period. And see, told you, total failure. Well, last time I checked, right before we got on air, it was 52 again. And that's a big move. Well, what happened? The demand curve shifted out. The demand, the amount of new demand for Bitcoin from my brethren and sisterin, right? I'm a boomer, and all the other boomers out there, they're not going to get a ledger and buy it direct. They're not, right? Most of them. What are they going to do? Some will open a Coinbase account, like my dad, and he has a Coinbase account. He doesn't own Bitcoin then. You tell my dad he doesn't own Bitcoin, fine. But a bunch of them are going to say, hey, buy me some of that IBIT. BlackRock's, advertising this IBIT thing. Buy me some of that. And so that's going to happen. You and I talked about this last time we were together. You said, well, what's your view of Bitcoin? I said, well, look, we're in crypto summer. And crypto summer is a period where we're going to drift slowly, series of higher highs and higher lows. So not without volatility, we're going to drift slowly toward fair value. Well, why is that? Well, after crypto winter, okay, and you bottom, you get crypto spring where you just kind of bounce around the bottom and it's kind of yuck and not a lot happens. Well, then crypto summer happens where the investors come back, right? They've gotten over losing money and they come back and they're like, hey, wait, if the fair value is 52K, and I was rounding and said it's 50, but according to Tim Peterson's Metcalfe's law model, the fair value is 52. So we were at in the 30s. We're going to drift toward that 52 number by the halving. But the caveat I said is if, and I might have said when they crowned the king, that BlackRock was going to get crowned. Now, I didn't think they'd do all 9. I actually didn't. But that's even better because that's more demand. And so as we've come closer to fair value, now we've totally completed that segment of the move. Well, now we focus on the next thing, which is the aggregate supply shift. So when we have the fair value doubles. Well, no, that's not how it works. I'm like, well, no, that's exactly how it works. Because if you cut the block rewards in half of the miners would go out of business because their costs are fixed. So the price in historical halvings has doubled. Not immediately, but over time. Now, I don't know if we talked about this or not, but I've kind of changed my thinking on that because of ordinals, because of inscriptions, and because of transaction fees, maybe we don't double this time. Maybe we only go up 50% because we don't have to have all of the money come from block rewards. So let's say we get to 75 as fair value. And again, the model will tell us what that fair value is, but let's call it 75. Then what happens is we'll get to crypto fall, which is the June period post the halving. That's when the craziness starts to happen. That's when the FOMO happens. Then we get into Thanksgiving and everybody goes home and everybody's patting them on the back and come on in, you get 2 turkey legs this year. Whereas 2 years ago, you're not invited anymore. You're disinvited if you're a crypto person. So now we're going to get that FOMO top. And in the past, that's gone to 2.3 times fair value. The fair value was 30,000 in the last cycle. We got to 68, 69. This time, let's say we only get 2 times because there's not as much leverage this time because they cracked down on Binance and others. So let's say we get 2 times, that'd be 150. I think that's baked in the cake. I'll make a big statement. I've said this a couple times on Twitter. I believe this year in 2024, which by the way is the first year of this epic, the blockchain era, the truth net, as I call it, I believe more money will be converted from fiat to Bitcoin than the previous 15 years of Bitcoin's existence. I think upwards of $300 billion is going to get converted into Bitcoin this year. Big number. The bottom line is the reason we have this 4-year cycle in crypto, it's driven by the code in Bitcoin. And the code is not going to change. Every 4 years, we're going to have a halving, which means every 4 years, there's going to be this upward pressure on price to reward the miners. That's going to draw in the speculators and ultimately the gamblers who FOMO in at the top. And then we're going to crash. And those crashes will always be worse than fair value, right? When you crash, you don't go to fair value, you go through fair value because people panic and shorts get liquidated. I'm sorry, longs get liquidated, leveraged longs get liquidated, not the shorts. The shorts make money. So I do think you're right that this cycle is exacerbated by the entrance of new ways to get demand. The first cycle, when it was a science project, suddenly you could buy it not in the back alley, literally where you had to meet somebody and you had to worry about getting hit in the back of the head with a wrench, to you could do it at Mt. Gox, right? And then that failed. And then you could do it at Coinbase or Kraken. And that not failed, but then that got dicey. And then you had this thing, GBTC. So the last cycle, people forget this, right? We went from 10,000 to 60,000 in about 4 months because GBTC got $10 billion of demand into their trust. That was what drove that cycle. Now also, you had some Michael Saylor buying, and you had a few others, and you had Elon's famous quote where we're not going to take it for Tesla, and it crashed. Remember, it went from February down to June, down 50% before it rallied into November, when he's like, oh, I'm kidding, you can go back and buy it. So there was plenty of demand. And what's going to happen every cycle is there's going to be a new avenue for demand. So this cycle isn't the trust, GBTC, it's the ETFs. One of these cycles, it's going to be central banks, right? Literally, central banks are going to say, I got all this gold and it's expensive to store and it's kind of cumbersome. I could put a lot of Bitcoin right on this little phone and just put it in the vault. And I think central banks will start to buy. And then you're going to have, someone's going to come up with, I've been talking about this for a while, that if you think about the internet was invented in 1991. Tim Berners-Lee wrote the first web page and boom, we have the internet. But it took 5 years for it to become kind of well-known and usable, because we didn't have the browser. So Mark Andreessen invents Mosaic, and then Microsoft steals the idea, which they always do, and they, introduce Explorer, and boom, the internet's a thing. And then the mobile net, mobile telephony wasn't invented in 2007, but this thing was released in 2007. And all the companies were like, oh, that's stupid. $500 for a phone? I'm never paying $500 for a phone. They'll have zero market share. In fact, I watched the video of the Nortel guy basically saying, no way they compete with us. What happened was the iPhone was the next window, the next portal into the mobile net. So we had the internet, the mobile net. Now the truth net, I will argue, is going to be a hardware security module, right? Whether it's a ledger or an Elipad, or maybe it's one that hasn't been invented yet, or whether they finally figure out how to make the enclave work in the phone. I don't know. It doesn't really matter to me. But someone's going to invent that, and that's going to onboard an entirely new generation of users. And so the numbers are kind of crazy when you think about it. Bitcoiners, we all know each other and we all talk to each other and we all tell each other how smart we are and yay us. Infinitesimal number relative to humanity. And there's a whole bunch of people that 10 years from now, 20 years from now, this is going to be so commonplace and so ordinary, you and I won't be able to talk about this because it won't be interesting anymore. If you believe, as I think I do, and you do, and others that have seen the light, that this is a technological evolution that is never going backwards, right? It's just going to keep evolving and keep transforming and keep enveloping the broader world until, and I use this prop all the time, that, my granddaughter, who's 1, will never have one of these. She will never have a leather wallet. She will never use paper money, ever. In her life, she will never use paper money, right? She will only use digital money. And people are like, that'll never happen. Yeah, it will. And it'll seem normal 20 years from now, but it doesn't seem normal now.